A hard word. Income
It's
ETFs. Do they qualify as a scam? I don't know. I think so because of the way they're promoted.
yes, it's important how they're marketed.
So today we're going to be taking a look at income ETFs, which are growing in popularity by crazy leaps and bounds. And we'll actually get into it and we'll actually show you how you can actually do way better. And it doesn't take a lot of time. And you'll probably vastly outperform the income ETF and the S&P 500 because the income ETFs don't even outperform the S&P 500 that they're supposed to outperform. So we'll be showing that today. And that's our show for the Option Genius show for Friday. And looking at the markets today, we're down a little bit, which is good. We're heading into the weekend. NASDAQ is down 2 points, or the Qs are down 2 points, 0.3%. S&P is down 0.2, RUT's up 0.3, oil is at 82, gold is up a little bit up at 4,040, 44.36. Sorry. Um, and so what's going on today? Did we get any big news today?
No, it's just a little bit of we have a little bit of sell-off. I think there's a little bit more concern about the Middle East is what I'm reading. And then there's also, um, they're a little bit worried about the yields, going up a little bit.
Yes.
But
So,
yeah,
so the 10-year yield has been it's at a rate now where it hasn't been in like 20 years. They had a bond auction yesterday, which did not go off very well. And so people
oh,
are getting concerned that the rates on these yields continue to go higher and higher. Even though inflation numbers came in and they were kind of
mild.
flat or
Yeah.
what they were expecting. But if the yields keep going higher, that's going to be a big problem because the government needs to continue to recycle all their debt, which continues to grow. It's in the trillions of dollars. And we actually did a show on the yen and why the American government had to go in and buy yen to save the Japanese yen from defaulting or crashing.
Which is
So
really
that
big. I mean, it's a big thing.
yeah, the Japanese are the number one buyers of American treasuries. And so they were talking about, hey, we're going to have to sell these treasuries because we need cash to support the yen and buy yen. Um, and because of that, the Americans came in and bought a whole bunch to support it. But that support was there temporarily. But since then, the yen continues to depreciate against the dollar. So
No.
it was a temporary thing. The Fed also opened up, I think it was $100 billion lending facility for Japan, so that if Japan wants, they can borrow up to that much to go and buy more yen to support the currency themselves, but then they would owe the US Fed. So very interesting stuff happening in that sense. But rates are going up across the board, and people are thinking, hey, is it going up? Is that a good thing or is that a bad thing? Right? And you do have, like, we had the wholesale price numbers and the PPI and all that stuff, and everything's coming back normal. The jobs number was actually down, like
Yep.
people are leaving the workforce. Unemployment New unemployment claims were down, and the unemployment rate is somewhere around 4.1, which I think is surprisingly low. And I don't know if I believe that number, but
Yeah. You're waiting for the revised numbers.
I mean, you can have revised numbers, but I just think there's a lot of people are just not look.
Right. So is it really accounted for?
Yeah. So now if you have, let's say from what I'm hearing, right, a lot of college kids are graduating, but they can't find jobs. So what are they doing? Well, they're driving Uber. They're doing DoorDash. They are, going online and trying to find some side gig. Now, that doesn't mean they're going to go and apply for unemployment. So how are those people tracked is my question. So I don't know. That's why I don't know about that. But, um, you know, earnings continues to do well.
Hmm.
We're almost done with earnings season, and all the companies are kicking butt and saying, yeah, we're making tons of money, and it continues to grow. The AI trade seems to be back in vogue, even with all of its incestual funding and lending to each other. But I don't know. It's like all things are okay until they're not.
Yeah, I think there's like we talked about like a certain catalyst, right, that could tip something.
Yeah.
And then it just follows through. But
And
until
I
then, we can't identify one, right?
Yeah, and I keep thinking about it. I'm like, okay, we're, halfway done with August. We're going into the worst month of the year, the worst 2 months of the year. I don't even know. Like, I want to put trades on, but I'm still kind of skeptic. I'm still hesitant. Like,
I am too around this time of year, usually around September.
yeah,
Um,
because any trades we put on now, like right now, we're at what, 35 days to expiration. So you put a trade on now, it's going into the heart of September. And
yeah,
so something happens. And I'm looking for what are the catalysts? Well, there's still the Iran stuff, which hasn't had make any change. No, nothing has changed there. And then you have the Fed meeting, which most likely will be a non-event and they won't do anything. So what's going to cause us to go down? I
great
some
question. Um, I kind of have the sense it's going to be this way until midterms, possibly. I mean, possibly.
Yeah. And I actually, that might be it. That might make changes in November based on the polling.
Hmm.
Right? So if somebody was mentioning that, hey, look, if the Republicans are going to do really well in the midterms, markets are going to go up. If the Democrats are going to do really well, we don't know what's going to happen. I would probably assume the markets will still go up, even if the Democrats are doing well and they take over the House or maybe House and Senate. I don't know. Because if that happens, then there's a lid on what Trump can do. And so that might be better for markets because it'll just be calm, right?
Yeah, a
And
little bit.
so
Yeah,
it won't be, oh, I'm doing this tariff. Well, no, you're not. And, the Congress is gonna be like, no. And I'm doing this, and the Congress is gonna be like, no. So
and
he
it just
won't be
kind
able
of
to,
goes
yeah,
aside.
he won't be able to do much. And then they'll be like, oh, we want to impeach Trump, and they're going to waste all their time and energy doing that. And so he will probably leave, hopefully, the economy away alone, and things will just maybe go sideways to higher from there. We'll see. I don't know. But it's an interesting time. It's, we got to trade the market that we have. And so
Exactly.
um, I've been lightening positions, the stocks that I've owned in my main trading account. In my retirement accounts, I'm not doing anything. It's just hold on.
Yeah.
Just hang on and hold on. Okay, we'll get through this. But in the trading account, yeah, definitely. I was even looking at, put spreads, like, okay, there's this, there's this. I was like, I don't know, man.
Well, I mean, we're at all-time highs of everything, and it's kind
Eesh.
of,
Yeah, it's amazing that we're
yeah,
at all-time highs and we're talking about, oh man, what's gonna send us lower, if
yeah,
anything.
right.
So, um, and I mean, normally I do like it that we don't trade much in September. And so it's a good, I think I want to, right? Because I see stuff going up and I'm like, oh man, I want to get it. I want to get it. It's the greed factor. Like, "Oh, I want to get it. I want to make some money." But,
Well,
yeah,
I think like you said, you're still trading. You're just a little bit more cautious, right? During these times of year, especially now.
yeah, yeah. And I think that comes, you have to, and then you have to like hold off on putting more trades on.
Oh, I think it's a good thing. It does it tempers you a little bit,
Yeah,
so
yeah. So let's get into this ETF stuff because
yeah.
this is big. I didn't know how big, but this was big, and the headline came across that Goldman Sachs, right? Goldman Sachs is spending like what? I don't know how many billions, I forgot how many billions it was to buy a company called Neos Investments. Now, Neos Investments is a ETF company, and they put out a lot of these ETFs that are called income ETFs. So the idea is like, yeah, you could put your money in the SPY and you might get a small dividend, but if you're retired or if you want income, what we should do is we should have an ETF that gives you income every month.
Hmm.
So you have both. You have the SPY and you have income every month. The best of both worlds. Doesn't that sound amazing?
Your cake and eat it too.
Yeah, that sounds so
Yeah, it
freaking
does.
awesome. I'm like, okay, how are they gonna do that? What's the strategy? Tell me the secret, Wall Street. And the secret is what? We're gonna sell covered calls.
Covered
Like,
calls.
okay. Yeah, you mean the thing that we've been doing for like 20 years? That
Yeah.
you're getting up, you're getting there, right? Wall Street is like now getting there. Um, so well, Goldman Sachs is going to pay somewhere about $2.25 billion for this one company. And then they want to buy another company too. So they got another couple $1 billion for that to get into this space. Now they can make their own ETFs, but this company already has several ETFs and lots of customers. So Goldman Sachs, they just buy them. Now,
Might as
why?
well. You have the capital.
Yeah. Now, why would they be buying this if it didn't make money, right? And lots of money. Um, and so that was the headline. And they actually, the fun thing is, Goldman called it boomer candy. Boomer candy because the income is such a big draw for boomers and retirees that they're just all into this. And so if you take a look at the numbers, um, these ETFs, where'd it go? Uh, where'd it go? I mean, they're growing like crazy. Do you have that? Do you have it in front of you?
So, yeah, let me let's see here. Um,
All right. So,
did you find it?
yeah. So these equity derivative income ETFs, in 5 years, they launched about 5 years ago. They have grown from 6 billion in assets to $175 billion in
Okay, yeah, I see it
assets.
now. Okay.
There have been 174 new ETFs in just the past 2 years, and it's growing 70% annually since 2021, according to JP Morgan. So this field, this asset class, if you can call it that, has been growing 70% a year for 5 years. That's insane.
Insane.
And the
Absolutely.
and the only reason is because the people think that they're getting something that they're not. Because after 5 years, the numbers are in, right? The
And they're not
numbers,
great.
the numbers are in, and you take a look at it, and it makes sense. Like, oh, if you have the S&P and then you just sell calls on it, well, then you'll make more money because you'll have, and the calls will expire, or even if they don't expire, then that's fine because we'll buy more and we'll have the income from the options, right? So there's one that is owned by this NEOS company. It's called SPYI.
Hmm.
And basically, they just sell covered calls on it. Um, they have done over, through June, the end of June, since they started, they have done 70.14% return. That's really good, right? The
It
S&P
says since
500,
June. Since June.
no, well, this up till
Up
June
till June.
26th,
Okay.
since they started. Now the S&P 500, on the other hand, has done 96.6%. So it has outperformed by 26%. And that might say, oh, well, that's a lot. That's a cool, yeah, okay. So that in terms of the numbers, like if you had started with 300,000, With the ETF, you end up with 510,000, but with just the S&P, you end up with 589,000, which is a $80,000 difference in 5 years.
So why are you doing it?
So exactly, it's like, why are you doing it? So it's like, okay, maybe this ETF is, maybe this is not the right one. I mean, one of the things that they do is they charge a fee, a pretty hefty fee of
Of course.
0.68%, right? Now the SPY, they also have a fee, but it's only 0.09%.
There
So
you go.
there's that thing. And then the other thing, the other reason that this ETF has underperformed is because in this time period, the last 5 years, we've had a pretty good bull run. And so the market kept going higher and higher. And of course, we know this because we sell covered calls.
Mhm.
But if you sell a covered call, you are capping your gains, right? So you are limiting how much money you can make if the stock continues to go higher and higher.
Right.
S-
So would
uh,
you do a cover call in this situation?
If
Probably.
something is going higher and higher, you do not do a covered
That's
call
right.
on it. That's the most,
You
that's
let that
like,
horse run, right?
yeah, exactly.
Yeah.
It's like, hello. Um, you know, they do have this ETF has a 12% distribution rate. So they give you back 12% every year. Now that's not a dividend. Um, it's part of the income from the fund. It's part of the option money. And they also give you back part of your own capital. So the money that you'd put in, they're giving it back to you. So you're not really getting that 12%. Um, you
But
know,
that's what people are blinded to, right?
that's what they say in
You
the
see
marketing.
that.
Like, hey,
Yeah.
you get the S&P plus you get a 12% government yield. That's what they call it,
Hmm.
a yield. Like you're getting 12% on your money, but you're making less money, number one. You're making a lot less than 12%. Like you're
Right. But you have no idea,
you're
right?
missing
Because you're
out. Yeah, you're missing out. Um, Now it's better than like a money market fund, but just putting it in SPY would be way better. And so this is not the only one out there. I mean, there's so many of these. There's the most popular one, I think it's called JEPI. JEPI has $44 billion of assets just by
hmm
itself. This one, SPYI, has $11 billion of assets, and it does it says it does S&P 500 stocks plus actively managed SPX calls and call spreads. So that's what the SPYI does. JEPI does low volatility stocks plus stuff on the S&P 500 and call options on that. And there's other ones. There are so many. They're all mixed. You can do SPY ones. You can do Nasdaq ones. You could do Nasdaq ones that are Nasdaq 100 or the entire Nasdaq. You can do ones that do some calls and not all calls, and so they're totally mixed. But the fees are 0.3% and higher on all of them,
same old
and
story though, right? So these fees just eat away at everything.
that's
And
part of it. Yeah.
yeah, it's part of it,
The
right?
fees eat away with it, and you think you're getting 12%, but you're not because you're actually paying taxes on that 12%. And that 12%, it breaks down to what, 1% a month? That's decent for covered call writing,
Hmm.
but it's not anything to write home about. Like it's okay. That's like on the bottom low end of the scale of the range. Like if you told me, oh yeah, I'm doing covered calls, I'm making 1% a month. I'm like, hey, that's good. I
That's what
mean,
you should be getting.
you could do better,
Yeah,
but
you can do
it's
better.
okay.
Yeah.
It's okay. You're a beginner. You're like starting out, right?
Yeah, I mean, that's like standard procedure.
Yeah. It's like you're new to it and you're just
Yeah.
learning. Okay, as you learn, but these things have been around for years, right? Um, and they're active. They're active management. I mean, people are actually doing that, selling, deciding what to do, all that stuff. And so it's like, okay, how have they done? How are the other ones done? So we looked at SPYI, right, which underperformed. How has the other one done? And again, every year the SPYI has underperformed by 4.5%. Now that includes all of the money that they were giving in yield.
Hmm.
So if you take that and you reinvest everything, instead of taking the money out, you reinvest it, the SPYI still underperforms 4% every single year. And that's actually one of the better ones because the JEPI, the biggest one of
I
these,
see it's 7.
underperformed 7% a year. Like you could have made 18 in the S&P, but over here you only made 11. Sorry.
Yeah, they're all in the negative. Like I have JEPI, SPYI, we just talked about. Devo is another one. And there's tons of them.
DIVO.
XYLD, right?
Hmm.
Um, the fund basic return is between 8 and 11%. And then you have the S&P is ranging from 15 to 18%. So you're losing on all accounts.
Yeah. Hmm. And so like they all have different strategies, but the real point is, okay, you're doing less than the S&P 500. You're paying for the privilege of losing less, of making less. And then it's something to me the most important thing here is that this is something that anybody can do. And it's something that we teach. We have been teaching this for 20 years. Anybody can do this. It's the most basic strategy of option selling.
It's what I think that most people should learn as you start to do options. Right?
Hmm.
It's the easiest thing to understand, I
It's
think.
the one that if you tell your broker, hey, I want to do options, this is the first one that they approve you at. Like they don't
Yeah.
even ask you, oh, you have no experience? Okay, here, do this.
Yeah.
Right?
Yes, it covers them. So,
Yeah, if you want to do more stuff, then you have to get approved for it. But
right.
this one is like, yeah, sure, go ahead. You know, it's
Yeah.
it's the simplest one. And part of these ETFs, what they do is they sell at the money.
Hmm.
They're selling at the money and they're still only making 1%. Now, understand, like when I'm doing it in my like retirement account, I don't want to lose the shares. And so I'm selling out of the money. I might be selling 20, 25 delta out of the money calls, covered calls. And then, even then, I'm getting 1 or more percent. These guys are at the money. They should be making three, four more, and they're still losing. So I'm not sure what the heck they're doing. Maybe they need to take an OptionGenius class and figure out.
Yeah.
I mean, it's not rocket science, but they're still not doing it well. But these are marketing firms first, right? Their whole program is to make money off of this from the fees, not really from the trading.
I mean, it sounds nice. They use nice words like income and, that sounds wonderful for someone. And again, you're lost at what's actually happening, right? If you don't go deeper.
Yeah. I mean, imagine, you have some guy, he's in his 60s, he's retired or just
Yeah.
retiring. He goes to his financial planner, and the financial planner is like, okay, you have a good nest egg, blah, 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 blah. But you probably need some income now. You need monthly money coming in so that you don't have to sell the nest egg, right? You don't have to get out of it. You don't
I
have
know
to
what to
sell
get you
your
in.
assets. Yeah, I'm going to put you in this income fund. They've been around for 5 years. They're doing great. They're paying 12% income yield. So you're going to get that 1% every month. Isn't that amazing? Oh, really? Yeah. And then you're invested in the market. So if the market goes up, you're making money there too. And you're getting
Yeah.
the
And
income.
meanwhile, he's like, hey, he knows the market's going up and up. You should be doing well, right? Regardless.
Exactly.
So
Right.
everybody's happy.
So, I mean, you could put it there, or you could put it in a money market fund that'll pay you like, I don't know, 1%, 2%, or you could put it in treasuries. Treasuries will pay you like 4% right now, maybe 5, but this is paying 12, and you get to be in the market. So, best of both worlds, right? Your money's growing and you get income. Oh, wow, that sounds really good. Okay, do it, boss. Sign me
I
up.
mean, sounds great, right? I'm busy
Uh-huh.
with everyday things and
Mm-hmm.
take it away.
Yep. Yep. But
So it's the same old kind of story, right? You
and
have to really
so
understand.
yeah, I mean for a boomer, if you're looking at retirement or you're in retirement and you got another 20 years left or whatever, it might be good. But over 20 years, you're giving up hundreds of thousands of dollars. Like if you're age 65 and you think I'm going to live to 85, that's 20 years. So if you put your money into one of these income funds compared to putting it in just the SPY, not even doing anything else, you will have like let's say you have a $300,000 account, right? You're starting today at 65 with
Mhm.
$300,000. By the time you're 85, you will have missed out. on $700,000
Yep,
because of these funds.
that's a big leak in your boat.
That's a huge leak. I mean, we're thinking, oh, yeah, it's only underperforming like a couple percent a year.
Yeah,
Yeah, that's fine. But,
that
know,
compounds.
over 20 years, yes, that's $700,000 that you do not have, that you did not get to spend in your lifetime or give to your charity or give to your heirs or whatever. And then the freaking worst thing about it is that you could do it yourself.
You could easily do it yourself
You could do it yourself. We do it all day long.
all
Come
day
to the
long.
club, join us in the club. We'll show you how to do it. And you will make
It,
so much more than you're going to get rid of your financial planner. If you're fine,
you
if there,
will.
this is like, okay, this is a clip for, like the shorts on social media. Like, dude, if your financial planner tells you to get into a income-based ETF, fire that financial planner and sell the covered calls yourself. It takes literally 5 minutes a month.
It makes me want to go back and have a conversation with various financial planners just to have the conversation, right? To see what they pitch and what kind of, what they're doing. But
Yeah, I mean,
it it does frustrate you that this information is so out there and it can be done for the everyday person, right?
hmm
And we want to at times scream from the rooftops that you can do this, right? And you
But
have to have the will
people,
and join
yeah,
us, right?
yeah, but
Teach you.
people are like, no, no, they're a professional. They'll handle it for me. I don't know. I don't know numbers. I don't know math. I'm not good at math. Okay, can you press a couple buttons? I mean, you're on Facebook, right? If you can use
Yeah.
Facebook, if you can use Instagram, if you can watch YouTube, you can do this.
Yes. If you do A, B happens. That's kind of how
Exactly.
it is.
Right. I mean, we even wrote a book. It's called Passive Trading. We'll give it to you for free. Go to passivetrading.com. You can get the book for free. We'll ship it to you. And it covers exactly this. And it tells you how to do this step by step.
Absolutely.
And it's like no brainer. It's like, yeah, we do this, we can do it. And it's not even one of my favorite strategies. Like I wouldn't even, if you told me, hey, income, I'm like, yeah, okay, I don't want to do covered calls for income. I do them in my retirement account because I have the shares and I don't want to lose them. And that's why I do them for just a little bit extra when the stock is down. But overall, they are not my favorite income strategy, number one, at all.
No, but I think I look at them as um, I have them like required that I do. I do them every month, right? Hands down. But it doesn't require a lot of maintenance, really.
No.
You just check it out. That's the wonderful thing about it. And I think it's a big fallacy out there that you have to constantly be watching these things. Okay, we talk about it, but you have to do this and this, and it's basically easy. And it is, but you have to understand what's going on, and you can do this. And it is something that is, like I said, requires really low maintenance, right? It's something that you just put on every month, watch it, and that's all you need to do.
I don't watch it. Do you watch it? Like I don't
Oh,
even log into my retirement
well,
accounts.
because I'm in front of the screen all the time, yeah, I will see it.
You'll
But
see it, yeah.
if I was not, I know that I would check it maybe, once a week or something like that. Or
I
come
don't
back.
even
Like
I don't even
you
do
talked
that.
about how you come back like every month and look at it. I
I just do it
mean,
every month.
you know where your expiration date is, and
Yeah, when
that's all you
options
need
are
to do.
expiring, I'll go and take a look at it and be like, okay,
There
do I
it
need
is.
to roll this or do I need to sell another one? And that's the only two questions you have. And that's it, you know? And like so basically, hey, Goldman Sachs, if you're watching this, you can hire us and we'll charge you less to run your funds, okay? Just give us like 50 billion and we'll run an options an income ETF for you and we will guarantee that we will beat the market and you can sell the hell out of it. And we won't even charge you that much. That's for Goldman Sachs, okay? That's not for individuals. I'm not telling you, watcher, that you're gonna beat I'm just guaranteeing that to Goldman Sachs so I can get a job at Goldman Sachs. And then if I do, I do. If I don't, they'll fire me. But yeah,
You'll be head of that strategy. They'll take it
yeah,
easily.
I'll run your little ETF for you
Yeah.
because these ETFs are doing the same thing. They're doing monthlies. They're doing
Hmm.
monthly covered calls, and it takes 5 minutes.
I know. And then they're just charging you, and you're just,
I can imagine the meetings these guys have, There's like probably five of them running this thing, and they all get together and they're like, hey, what are we going to talk about today? I don't know.
They're probably being auto done.
It could be.
I'm
It
not
could
touching
be.
it.
Yeah, it could be
I
done by a.
mean, there are people that it's mechanical and there's active and there's, you know, a plethora of different examples.
That might be what it is. There's nobody running it. It's just a computer running it,
Yeah, and
and
they're just raking in the fees. Hey,
they're
thank
just
you.
making the fees. And
Thank you.
that's why Goldman is paying up to $4 billion for just two of these companies.
Seems
That
like a
means,
sweet deal.
yeah, I mean, they're getting all the customers. That's what they really want. They're getting all the customers, then they can sell more stuff to those customers, right? Um, and yeah, it's a racket. It is really a racket. This is the latest Wall Street scam.
I'm
It,
really interested to see, come back and look at these numbers if we have a really, the market turns for the worse, right? It's all great and dandy when it's to the up.
well, no, it's not dandy. It's out underperforming on the
Oh,
way
it is.
up.
I mean, it is, but it looks like that, right?
Yes.
So,
On the way
can you
down,
market these same things? No. Well, you probably
uh,
could because people don't know either way, but
yeah.
um, yeah, the numbers
So
are bad and they'll be worse.
so we do have some comments coming in. We got Florida Mason. He's just lighting it up. He's like, speaking from experience, yield max was a bust. The idea is attractive, though. For example, mortgage companies will accept distributions as income if it's consistent over 2 years, but not for capital gains. He also has some of the SPYI that we talked about.
Mhm.
And he says it's done better than yield max, but it gets taxed. So ultimately, no free lunch. Now, yield max, I guess that's another one of these. Suffered extreme NAV erosion in down markets, just like you mentioned. It did horrible in the down markets, and it never recovers, and the distributions don't catch up. So he says there may be a case to say that SPII, JEPQ, etc., if you're going to live off the distributions, but if you are long term, the underlying is probably just better just holding the underlying. So, I mean,
That
this is
checks
some,
out.
yep. So, Florida Mason's got some real experience here. He's been putting his money in and he's seeing exactly what we're saying. And the numbers don't lie. The numbers are there. You can look them up. These guys are just unperforming and they're charging more to unperform, which is normally what Wall Street does because that's how they make their money off the fees. They're not, everybody thinks they're rocket scientists and whatnot. They're not. Rocket science they go to NASA, right? These
Yeah.
guys are just, yeah, they're coming out of good schools and they're making tons of money, and most of their money is made on wheeling and dealing, not actually trading better. So,
The
um,
average person would come and see these numbers, even if they're bad, right? And they say, "Oh, this doesn't beat the S&P." Um, the basics of like how do you do it, right? And they're immediately going to be like, "I don't know what to do." Right? How
most
do I
people,
do this?
yes,
Most people,
it's like the
right?
guy that you met on the cruise with the Apple. Yeah, he
Yeah,
had
had
the
no idea. Had a ton of them, right?
he had four,
Ton
what
of
is it,
shares.
4,000 shares.
Oh, like a crazy amount of shares of Apple.
Yeah, and so if he did a covered call once a month, he would
On
be
a portion of them.
on a portion of them, way out of the money, so you don't even lose the shares out of the money, he would still be making thousands of dollars extra.
And you don't have to be called away. I mean, it's not
And you
something
don't,
you have to.
yeah,
Um,
because these guys, I don't even know how they handle that, but they're probably taking the assignment and giving the shares and they're buying back. They're not rolling, or they might not be rolling. I don't know, but you
Probably
know,
not.
um, so it's not, and then it's not even like they're jumping. They have to do it because they have to show you that they're giving you income. So even when it's not a good time to sell covered calls, they still have to sell the covered calls.
And they're selling it close to the money on some of them.
Exactly. And
Yeah.
if the market is ripping, you don't get it. You don't get that.
Mm-mm.
Where you're doing it for yourself, you can take out. You can be like, you know what? Yeah, this is the market's going up. It just went up like last week. What was it last week? It went up like 4 or 5% in a week. So we don't have to. We can let it run.
Yeah, I mean,
Um,
like right here, I mean, it's true. What we're talking about. You have the flexibility to do whatever you want once you have this knowledge. You could skip a month if you didn't want to trade. You can choose different strikes. You can control your assignment. You could do all sorts of things. I mean, it's,
mhm.
I mean, wow.
Yep. So Florida Mason continues. He goes, he's doing credit spreads every day on NDX, and he's done way better than yield max. So that's awesome. I guess you're doing zero DTE. NDX spreads. I've never done NDX. So we do SPX.
Hmm.
So we have our market power program that won another one today, another winner today. So that was great. But then he also asked, and I'll let you answer this one. He goes, "What is your preferred income strategy?"
Preferred income strategy. There's so many.
Okay, pick.
I mean,
What's your favorite?
I
What's your
do
go-to? I'm tying you up, putting a gun to your head, and say you can only do one. Which one?
I mean, I really do like the covered call. I do.
It's your favorite?
I love doing covered calls.
I thought
Yeah.
I thought oil was your favorite.
Yeah, it is, but I'm starting with the covered calls because we're talking about them.
No, but
But
I'm telling you one. Just give me one.
okay, well, all right, then oil. Yes,
Your
oil would be.
favorite.
Yeah,
Your favorite is what? What are you doing on oil?
I do basic puts and calls on puts on
So like
oil.
straddles, naked straddles.
Hmm. Yeah.
Okay, so that is your number one. Naked straddles on
Hmm.
oil specifically, oil futures specifically, not
Exactly.
USO, not ExxonMobil, but oil, the future. You're doing futures options. Naked straddles is your favorite. Okay,
That's right.
I would probably say mine is. It's hard to choose.
You made me choose one,
I made you
but
choose
I do
one,
have
so
many.
I'm choosing. I like. I'd probably go with the naked put. Um, to me, it's more money than the covered call. Um, and there are variations to it. So right now, I'm doing weekly naked puts on several stocks, on threshold stocks. We cover
Hmm.
that in the club too, what a threshold stock is. But I'm doing nakeds every week on those threshold stocks, and then I'm also right now I'm experimenting with the 1 year leap naked puts.
Right. We talked about that. Yeah.
Yeah, so those are kind of those are even more passive than the monthly covered call because that you just put on and you let it sit. You don't have to even touch it every month.
I know, which is
Um,
pretty nice.
and depending on how you set it up, if you let it go all the way to expiration and it expires out of the money, you could make anywhere from 50 to 100% in that time frame, which is a year. So yeah, let me see any of these income ETFs beat that. Now you don't get the income. Actually, you do get income, right? Because you get when you sell the
You get
naked
it
put,
immediately.
you get that right up front.
Hmm.
And so then you can take that money and you can put it in a treasury or something else, and you're earning interest the whole year while the trade is going on. So I didn't even, yeah, you could add that part in and add it to your calculations about how much money you're making. But that's, you're adding another maybe 3% to the yield on that. So you're getting a big chunk of cash up front, and then you just let the trade out and you walk away with like, 50 to 100% if the trade works out. If the trade doesn't work out, you could just extend it for another year
Hmm.
or so.
Good.
And I'm not doing this on stocks that I don't know. I'm doing these on big stocks, Netflix, Meta, Robinhood, you know, SpaceX,
I have,
Tesla. Those are the portfolio right now for
I have
this.
puts on SpaceX right now. Yeah.
Yeah. So the SpaceX ones are doing amazing,
Yeah.
and the other ones are up and down because like Netflix, Netflix has been down. I think it's like down like 60% the stock, right? So is my trade is underwater. It's actually negative right now, but I still have another like 8 months to go.
All right.
So
Yeah.
as
Plenty of
long as
time
it
to.
as long as it goes above my strike at the expiration, I keep all the money. If it doesn't, or if I feel like, hey, it's getting tough, it's going down, I can then move it forward another year and get a whole bunch more premium for that and just keep waiting because that's the name of this game. It's just put it on and wait. Um, and of course, if I want to, I can always get out. I can always take the loss and get out if I think that something happens with the stock or the whatever. There's a new competitor or nobody's watching TV anymore or who knows,
Yeah.
something could change and then you could just get out as well. Um, definitely better than um, definitely better than the covered call ETF. Um, question comes, how do you select the short strikes on the on the 1 year naked put? It really depends. And I am testing different variations right now because this is for me, it's a new trade. So I'm testing it and we're going to be working on a workshop to teach in the club how to do it exactly. But I'm looking at the stock itself, and then I want to know what I think of the stock is going to do. So like for SpaceX, I thought the stock would appreciate. And so the first time I did it, I went in right at 135. So I sold the 135 put options for a year out.
That was right near the IPO, right?
Yeah.
IPO price.
Yeah. So a few days after the IPO, you saw the stock was like ripping after the IPO. It was going up to like 200 something, but I sold 135 thinking that, hey, if it ever gets back down to 135, I'll be okay owning it at 135 if I have to,
Right.
because that was the IPO price. It went under that, right? It went all the way down to like 100.
Close to about like 100 almost,
Yeah,
like 105, something like that.
yeah. But
Yeah.
because I had so much time, I'm not worried about it. I was like, okay, whatever happens, I had made my mind. I'm okay with owning it at 135, even if it goes down to 50. I think eventually it's going to come back up. So in my mind, this stock is a long-term hold. I'm okay buying it at 135, even if it goes down a lot. I don't like it, so I might roll the option a few times
Hmm.
instead of taking the stock. But that's how I chose it for that one. Netflix was a different story. Netflix was a stock that was going lower and lower and lower. And so I kind of waited for that one to maybe bottom out a little bit, or where I thought there was a bottom. And then I went out of the money and I sold, I think it was like the 30 Delta naked puts on that one. Again,
Hmm.
a year out. Um, and so that one is also under money right now because Netflix kept going down. But Netflix now, I believe, has found a bottom and now is coming back up again. So that trade will also be very positive, will be positive very soon. And again, it's a long-term thing. So I'm okay. Because it's so far in the money and there's so much time decay or the time premium left, I'm not going to be assigned right now.
Yeah.
As I get closer to expiration, as the time value goes down, then I have a chance of getting signed. So in that case, I might just have to roll it. But for now, there's too much premium there. Nobody's going to take. If they do, I make a ton of money. if they
Yeah.
if they take, if they assign me the stock, I'll be like, okay, I'll take it. And the follow-up question he's asking is, how do you decide on the minimum premium to shoot for? So on these, I have not decided yet what I want as a minimum premium. I'm looking at how much money I can make on the trade. So if you go in at, say, a 30 delta, you can make about 50% on the trade. If you sell it at the money, you can do about 100% on the trade. And so, and it also depends on if you have margin, regular margin, like Reg T margin, or if you have portfolio margin. I'm
Portfolio.
I'm doing this in portfolio, so my margin is a little bit less. When I'm saying that, hey, I can sell an at the money 1 year out naked put, I can make 100% in most cases. Now, if you're doing a Reg T account, it might not be 100%. It might be like 75% or 80%. So it'll be less because of the margin, because of
Right.
the type of account. But I think that's still pretty good in my book.
Yes, that would be pretty good. I think you'd be happy with that.
Yeah.
Absolutely.
And so, we're talking about companies like Facebook, Meta, Tesla, SpaceX, Netflix, right? Robinhood. These are the ones that I've been doing on. I was thinking
Yeah.
about doing it on Apple. Like this morning, I was looking at it like, hey, I want to get an Apple. Maybe I do it this way. But Apple hasn't really fallen very much. And so I'm thinking that I'm going to change it up a little bit and I'm going to be like, okay, what are the stocks that I really like long term?
Hmm.
And then I'll set up like some kind of signal or indicator or whatever notification that, hey, if this stock is down like 25%, let me know, and then I will go and do the trade.
Yeah.
So
That's pretty
it's
nice.
already dropped a lot. And then is the like a year from now, do I think the company is going to do better? I think so. Most of these companies are doing well. They're making money. Things could change, but for now, with the information I have now, I think they will do better a year from now. And so, kind of like Buffett, right? Buffett's like, hey, if you have a long enough time horizon, the stock is only going to go up.
Yeah.
So
Yeah.
good. So you can actually do this on the SPX, like SPY. You could do it
Hmm.
on SPX if you wanted to. You're gonna have to have a lot more margin though, because SPX is really big. But you could do it on SPY. You don't even have to pick a stock. You could be like, okay, 1 year from now, do I think the market is going to be higher or not? Now, chances are probably yes.
Probably
And if
yes.
and if
Yes.
you're wrong, just roll it out another year and then
Yeah.
do
So I
another
mean,
year.
there's
So,
so much flexibility, and I think that once you have these skills and you have so many no pun intended options that are available to you, right? So you're playing out your thesis, and all you need is time, and it's a wonderful thing.
yep.
Yeah.
And these are
All in your
stocks.
control.
These are trades that you just sit on. Like they're not active at all. I would say these are like super passive. Like, we got
Mhm.
passive trading, and then now this is like super passive. So,
Yeah, there are different levels. I always like to say there are different levels of passive trading, right?
mhm.
Um,
Yeah. So I'm like in the middle of thinking about rebranding kind of OptionGenius a little bit. And I think the people who are in retirement, they come to us obviously because they want to learn what we're doing. Um, but I'm thinking that the people um who are really uh who are really more in need or more desperate of it are the
mhm.
ones that are working that want to get out of the job, right? Because we're heading for this whole AI apocalypse, whatever. I don't know what's going to happen, right? But most likely, people that are working right now in whatever job they're in, if they still have a job, that job is going to be way different. And so they're going to be having to retool, they're going to have to re-educate themselves, they're going to have to do a whole bunch of changes, and people are going to have trouble with that. And so I don't know what the government's going to do. I don't think money is going away, but the government might have to come in and put some kind of floor. They might have to come up with like, okay, Medicare for all, so that way you don't have to pay for health insurance or medical expenses, and then you do something else, like maybe some basic income for everybody. Like, everybody gets $2,000 a month or something from the government. I don't know.
Yeah, and it's important that this is like in the next, they're
It's
saying who
fun.
knows, 5 years.
Yeah, like five. Yeah, 5 years. I
Yeah,
would say
it's
five
not like
years.
this is like 20 years away.
Yeah.
This is now.
Yeah. So what I really want to do, and I'm thinking is, you can we can target the people that are working right now. They really can't trade because they don't have time. And what are the strategies that they could do that doesn't take a lot of education that they can get up pretty quickly? And so the 1 year naked put is definitely one of those strategies.
Mhm.
I'm working on another one called the Texas two step, which I'm also excited about. I've been talking about it. I've been wanting to paper trade it or back test it for
The,
years, for
the
a while
Texas
now.
two-step in from your
Texas
home state.
two-step. Yeah, that's the name. It's a two-step trade. So it's like, okay, oh, Texas two-step. Yeah, okay, that sounds good. All right. And so it's a two-part trade. There's two parts together and you put them together, and that's why it's two-step. But that one is also a very, very passive trade. You put it on, it's a right now, the way I'm looking at it, it's going to be a 3 month trade. And so you put it on and you just want it to expire 3 months later. You don't
It's a
even want to
little
manage it.
quarterly trade.
Yeah. And you can make 3%. That's the goal. 3% a year. Put it on, let it expire. Put it on, let it expire. That's 36 a year. I think anybody would be happy with that. Right?
Yeah,
Um, so and yeah, and that money that you get when you sell the option up front, that's your income. So,
that's it, right?
you don't want to grow the account, that's fine. But when you sell the options in that on day one, you get that income. Congratulations, you just got paid for 3 months. Now just wait till it expires and then you do it again. And then you get 3 months more for income. And then you just do it again. So those are the two I'm working on right now. And then of course we have market power automation, which is where we do the market power strategies in your trading account.
Which
And
is doing great. Yeah.
That's doing well.
Yeah.
I'm looking at it today. There's one trade right now that's really on the bubble. It's up 125 right now. But if we go down even a few cents or a few dollars on the SPX right now, if we get down, right now we're at 77.84. So if we get down to like 77.75, man, this trade will be up like a couple $1,000 today. So,
Okay.
yeah. So the market, we had a market power winner, automated, didn't have to do anything. We had a double
Yeah,
dip.
one of the members said like, "Hey, I was asleep. I I made the money when I was asleep. I didn't even know."
Yep. Yep. My father, he's 80 something, and he is now set up with auto trading.
Oh,
With
you set him up. Okay.
set him up. He's like, I want to do it. I want to do it. Set me up. And I'm like, okay, but you're gonna have to set it up yourself. Like you have to go through the process. So he did everything, he signed up, then he connected the Schwab, he had to go to the Schwab portal, get a little key, then he took the key and put it in the new software and connected it so the counties are connected. Then he chose a template. Um, so the template, we have templates for 10,000, 25,000, 50,000, 100,000. And those are like pre-structured and pre-tested so that they have a good return, but low drawdowns and very low risk of ruin, meaning you could blow up your account.
Right.
And so he did that. He chose the $25,000 one and he just set it up and he just starts running. And I got home last night. He goes, "Hey, hey, hey, we won, we won." And I'm like, "I know, I know." And yeah, and
Was
he's
that his
gonna.
first trade, or as
That
he's
was
had
his
a
first
couple?
trade.
Yeah.
He's like, "I don't know exactly what happened, but the account is up."
You're like, I know. Okay.
Yeah, Dad. Like I don't advise that to any of you guys. Like if you're gonna
Yeah.
set up, if you
Learn
guys are
the
gonna,
trade.
yeah, if you guys are gonna set that up, you should know how to do it. You should
Yeah.
know what's going on. Like right now, I'm looking at the trade. I'm watching it. It's up now 220 now. But if I feel like it's gonna go down, I can still go in and exit it manually and keep and not lose. Right? So yeah, it is automated,
But learn how to trade.
but
Yeah.
if you have the ability to watch it, maybe you should on times like this. Because
Yeah.
I don't want to give up this $250 or whatever it's up right now.
Right. It's nice you can step in manually and just
Yeah, so
take the
yeah,
profit.
so if I have the time, I'm just going to sit there and watch. And if SPX right now, if it goes up a little bit, I'm going to lose. But if it goes down a little bit, I'm going to make a lot more. So that's kind of where I'm stuck, you know?
Mm.
Um, so next question from Mason is what is the best platform for zero DTE trading? We use Schwab.
Yeah.
That
I always keep my mind open to other ones, but it's hands down Schwab for me.
Yeah, so we're big Thinkorswim fans. I've been using that for since I started trading 20 years ago.
Yeah.
I'm crazy that it's been that long. But yeah, Thinkorswim has been around. And so I like it. It does everything we need. And Schwab now is the owner of that. So we're kind of with Schwab just because of that. Um,
It's like you get with a phone company and you get used to them. You
and
just
they
want to
get
stay
they
with
get
them.
bought by somebody else,
Yeah.
and they get bought by somebody else. Kind of like your banks, right? I opened an account at one bank. I don't even know Hibernia or something.
Yeah.
They got bought by another bank. They got bought by another bank, and now I'm at Capital One. I'm like, okay,
I know. I have a Discover and all of a sudden it's Capital One.
yeah,
Like I'm like,
they're
oh,
yeah, they're buying everything.
great.
So yeah, and then we're also adding on the to-do list we have Tasty Trade and Tradier. We're gonna add those, and then eventually I want to add Moomoo.
Moo Moo just because of the name.
Moo Moo, I like the name. The guy from the CEO was on the Fast Money show last night,
Yeah.
and in order to become a bigger player, you have to add tools that the other older players don't have, right? And so if you're a younger, smarter, faster moving company, you can do stuff that the big guys like Schwab cannot. And so they have added AI, an LLM, to their trading platform.
Mm. Yep. There we go.
So technically, and this is I want to we might have to try this out, but technically, you could tell the AI, you open an account at Moomoo, right? It's a crazy name.
You can't even
Moomoo,
keep a straight
Moomoo.
face saying it.
Yeah,
Yeah.
I was laughing when I heard this. What the hell? So you could tell the Moomoo that, hey, look, I want you to take a look at all of the stocks in my retirement account, in my IRA, and I want to do covered calls on them. And I want to do them at, I don't know, let's say 20 delta monthly options. And so go ahead and do it. And the damn thing will do it for you.
Yeah.
Yeah. And then you could also set up, be like, okay, if they ever get into the money, send me an alert and also alert me like, the day of expiration so that I can come in and check and see if we need to switch. Or you could even tell it like, hey, if it gets into the money, just roll it another month, So it could be like completely hands off.
Or only tell me when the account is up.
Yeah. No, but you could actually tell it what to do with
Yeah.
simple English and it will set it up for you and it will do it. And it's like, okay, you join the club, you learn how to do it, you go to Mumu, or you don't even learn how to do it. You take the transcript from our video in the club and you give it to the Mumu AI and be like, here, go do this in my account.
There you go.
It's that simple.
Just let it
Like,
go.
holy cow. Maybe we need to check. We're gonna have to get a Mumu account and just check it out. Like, okay, passive trading with Mumu. How do you do that? Like,
Yeah,
video
I
on
mean, it's
that.
worth a try to see how it works.
Yeah. So
This is the
Mason,
future. I mean, all these like the Schwabs of the world are going to have to catch up to that.
you have to. They don't have a choice.
Uh,
They're still
yeah.
playing cat. There's so many changes. They're still playing catch up by adding crypto. Like you can't.
Yeah, I was just about to say they just started adding crypto. Like they're like, oh yeah, Schwab, by the way, or Vanguard of all people. They're like, oh yeah, Vanguard.
Uh-huh.
We're gonna add crypto. Okay,
Yeah, they're all it. They got to get into the
they have
prediction
to.
markets. They got to get into crypto. They've added the single stocks. We talked about that recently. That one, Micron, is doing great. They don't have SanDisk as a single stock. I was like, oh man, because the options on SanDisk, you want to buy a call option, they're expensive.
Yeah.
And the stock is up to $1,600 today. They're like, okay, the stock is
Well, just
expensive.
check back in like a week.
The, I hope not. Well, that means my Micron is going to be down too.
Yeah, MU has
Uh,
been a big mover.
yep. And Mason says that Tasty Trade does have better order entry for gas or fast trading, I guess. But the charting blows up in fast markets. So he went to toss. It's terrible for fast assessment of premiums at different strikes. Yeah. I mean, if you're doing it really quickly, yeah,
Yeah,
it takes
yeah,
moving around. But again, with the passive stuff that we're mostly known
yeah.
for, we don't really, it's okay. It's good enough. But
We don't need to be super fast on
yeah,
it.
I mean, the market power is good enough. And now with the automation, but I mean, I don't know. All of them are okay. They all have their pros and cons. So,
I even
um,
like interactive brokers at times. I do like,
interactive is very fast.
yeah, I do like that.
The fills are much better and they are very fast. So if you like, they're built for professional traders.
Hmm.
They're not going to hold your hand and show you how to use the platform. They don't do
No,
that. They don't do that. But if you know what you're doing, they're probably the best one.
yeah, yeah.
Um, yeah. And so, anybody that really wants one, I would look there. And there are more coming. You know, there are more and more of these brokers now popping up. And
There are more
so
moo out there.
Kalshi is now, Kalshi is the prediction market. They are now adding stock trading and options trading,
Yeah,
So it's like eventually everything is going to be doing everything. Or we're going to have a big consolidation again. Like we had consolidation with these option brokers. So now there's very few of them, but now there's all these new things that are used
I
to
could see
be
that happening. Yeah,
they used to have other markets and now they're getting into this and these guys are getting so everybody's like going to be doing everything and then the bigger guys are just going to buy out the little guys and then 5 years from now we might be back to like five players.
it's
So,
like banks and airlines, right?
yep,
It's just a few.
yep. So just to recap, income option ETFs are, I mean, if you they're not better than the S&P, so I would not say that you should put your money in there. You can do better with the S&P. Now, the income that you get, you still have to pay tax on. So if you want the income, just leave your money in the S&P 500 index and then just sell some every month. for the income because
Hmm.
you're still paying tax, but you'll make more money in the ETF because the fees are lower and you're not screwing around and limiting your gains. Now, that's so yes, income ETFs. What are my take on that? Don't do it. They're not worth it.
Yeah,
Okay. But the idea is great. The idea of generating income from the stocks you own is the best idea they've ever had, and they're just screwing up the implementation. So you can learn to do it yourself, number one,
absolutely.
or I mean, you learn how to do it, you learn how it works, and then you go tell your AI at Moomoo to do it for you, or any other AI that you can tie into your brokerage account now, because eventually we'll get there too. I was talking to
Yeah,
Claude. I was like, "Hey, Claude, I got this trading strategy. Can you set it up so it runs automatically on Thinkorswim on Schwab?"
sure.
And Claude was like, "Yeah, I can figure that out. Sure, no problem. We'll have to set this up, and we'll have to put it on AWS on a cloud server, and da 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 da. But yeah, we can have it done." Like, okay. Cool. The hard part is coming up with the strategy. That's the hard
Right.
part. Getting it
Yeah.
automated now is not hard,
The
but
foundations of the strategy you're doing are so important. That
figuring out a
doesn't change.
strategy that actually works over the long term consistently is what's the hard part. And so, this is a strategy, and it's a covered call basic strategy, and it works over the years. It has worked. It's in like if you read my book, Passive Trading, you'll see it works. And even naked puts. There was one of the examples or a couple of examples I did in the book where I did naked puts and I made more money on the naked puts than I did on than the stock would have made
Yeah.
over a whole year. And it
Which
was like
is,
Walmart. We did it at Walmart.
yeah.
Okay, how much
Yeah.
Walmart to go
It
up?
was Walmart was the
Yeah.
example. Yeah.
It's like I made this much on my naked puts, and the stock went up this much. So I actually do better than that, and it just takes a couple of minutes a month. So
And
uh,
what it would mean to your life, right? As supplemental income, and you can move it up to whatever you want to do.
yeah,
I
yeah,
mean,
and it's you can leave it in and grow the account to compound it. You can take it out and live off of it. You can do a little bit of both, right?
yeah,
Um, so and then Mason's asking, do you have ThinkScript expertise in your community? Um, I would probably have to say no. We don't really focus on that. But I would say, if you're advanced enough to know what that is, um, ChatGPT or Claude can write it for you. So you tell it what you want, tell them to write the script, and they'll write it for you. And then you
yeah.
just have to upload it. So nowadays
Lots
it's
of
like
possibilities these days.
yeah, it's gotten very simple
Yeah,
nowadays.
yeah.
They can write it in PineScript for TradingView, which is a different broker. They can write it in ThinkScript, or if you find a script from because a lot more people use TradingView, so there's a lot more of those scripts out there that are
Hmm.
written for TradingView. If you find the PineScript TradingView script, you can give it to an AI and it'll move it over to
Transcribe it over.
yeah, to Thinkorswim drinks. So, um, when we did the market power indicator, right? When we had to write it in ThinkScript, I tried to write it in ThinkScript. The guy wanted $5,000.
Yeah, it feels so long ago.
Yeah, we paid it.
Yeah,
We didn't
yeah,
have a
I
choice.
know.
We
Yeah,
paid. I was like, wow. Even now, there's still people that like, hey, if you want them to write it, they'll write it and they will charge you thousands of dollars.
of course they will. Yeah,
So that's the only thing. Like, when you hire somebody to do it, you have like an expert that's done it before. Um, with the AI, it might not be perfect the right time. You're gonna have to play with it and go back and forth over and over and over again. And then you got to double check it. So probably what you want to do is use two or three different. If you're gonna trade with it, really, it's
yeah.
serious. So you want to make sure it's right. So you have to you can get it done in one, and then take it to another one and have it review it and fine tune it and test it, and then take it to another one and have it do the same thing so that you have like a triple check, and then put it up there and paper trade it for a while and then maybe go live. But yeah, so anyway, we've gone over because I had
Yes, we
fun
have.
today. This was a good one.
Yeah, it is. Very
Uh,
interesting.
but when I first started, it was like Wall Street is a scam. Wall Street is rigged against the little guy. And I mean, this is just more proof. Like these income ETFs are Wall Street's way of screwing the little guy out of their money again.
Well, Wall Street also makes it, they want to make it look so complicated, right? Just stay out of their way. I mean, this is basic trading knowledge, right? That
Hmm.
anybody can learn.
Yeah. And if you look at all the names of all of these ETFs and how many billions of dollars are in the ETFs, and they try again, like you said, they try to make it complicated. So some of
Mhm.
them are like, yes, we do at the money. Some of them we do out of the money and in the money. Some of them we do naked put, we do cover calls, and we do call spreads. Some of them are like, oh, we're only on NASDAQ, but sometimes we do SPX. Some of them are like, we'll do it on part of the portfolio, but not all the portfolio. And
And
sometimes we
everyone's just like, yeah, okay, that sounds great. You just take
it's
care of
so
it.
freaking
Take
complicated.
care
Like,
of it. Yeah, thank you. Income, yes.
oh my goodness. All right, my friends. So that's it. Today's Friday. Have a great weekend. Markets are still down a little bit, but not that much. We'll take it. And we will see you all on Wednesday. If you have not subscribed to the show, the video, whatever, the podcast, whatever you're listening to, wherever you're hearing us or watching, please do so. It helps us grow the channel, get the word out there because Wall Street's stealing everybody's money. So we got to tell people, hey, stop
I
paying them,
know.
do it
Come
yourself.
join us and learn this stuff.
This is how you do it. We
Yes,
got videos that'll show you how to do it. They're free. They're on the website. They're on the YouTube channel. So just learn it for yourself. And if you need help, then that's what we're here for.
that's what we
That's
do.
kind of like we'll teach you the stuff. You can watch the videos. You can learn on AI. AI will tell you what a cover call is. But when you need help, watch, somebody looking over your shoulder or somebody that's actually doing it and you want to know, oh, hey, what are you doing? That's where we come in. So, and we're not that expensive. We should be charging a little
Yeah, we should.
more.
Absolutely.
But it's like a labor of love, right?
Yeah,
So,
it is. I mean, there's nothing better than helping people. So come on.
yeah, you make your money
Yeah,
trading, then you spend your time doing stuff like this.
that's right. That's right.
All right, everybody. Talk to you soon. And have a great weekend.
All right. Bye-bye.
Bye.